Hello everyone, this is Shaurya from Market Times TV and you are watching Journey of Financial World around the world. And today we will discuss the major events that will impact the markets in this week. Sensex opened at 38,014 and has gained more than 1200 points since then. Although in between it has gone even above 1400 points, and right now the gain is above 1100 points. And Nifty also opened today at the point of 11,572. Celebratory mood due to reduction in taxes is quite high, and which is taking stock markets higher and higher. And rupee also opened today below 71 against dollar. Indian stock markets have continued their run which they started last week, but Asian markets however were quite mixed. And if you look at Asian markets today, Japanese market was closed today, but Shanghai was down by 29 points, HSI was down by 213 points. Australian stock market ASX 200 was however up by 18 points. And now let's see move on the events which will want to impact the markets. Last week witnessed an increase in geopolitical tensions, and responses by central banks of major countries like US, Japan and England showed that. And today it also impacted the trade tensions. Tensions increased between US and China, Middle East and in Hong Kong. While the response of central banks can be perceived to be at the max just cautious of slowing economy, but they did not indicate any portrayal of fear about the recession. Bank of England and Bank of Japan has kept the interest rate same while adding that things might become less positive. Fed has reduced the interest rate, but it was more like an insurance policy against the growing uncertainty, while adding that the condition of economy is not that bad. This week's economic data will give picture how correct central banks were in stating that the condition of economy is not that bad. On Monday, PMI and manufacturing flash services data from New Zealand, Germany, Europe, France and US are on investors' radar. And services PMI of all these areas as expected are above 50. But manufacturing index of Germany and Europe came below 50, and that also of France, as that was expected by the analyst. On Tuesday, investors will focus on PMI from Japan, where manufacturing PMI flash is expected to be below 50. In Eurozone, investors will eye on business confidence data from France and Germany, which is expected to remain same as last time. Wednesday, investors will hooked on the UN General Assembly meeting and minutes of Bank of Japan's monetary policy meeting. Consumer confidence for Europe will also be released, and that is expected to remain same at 102. UN General Assembly will also be on investors' radar on Thursday, while the speech of ECB President Draghi will also catch investors' attention. Market moving data like economic GDP from US and consumer confidence from Germany will also be released. Quarter-on-quarter GDP of US is expected to grow at 2%, while consumer confidence of Germany is expected to remain same at 9.7. Data on consumer and business sentiment from Europe and US will dominate the last trading day of the week, while housing prices from UK and personal income from US will also be released. Consumer and business sentiment are important because they portrays the mood of the business and consumers, which in turn gives idea how much will be spent by business and consumers. As both consumer confidence and business are either expected to remain same or fall, this week it shows that at best expenditure won't show an increase, which is not good for inflation point of view or from growth in GDP. It also shows that economy is close to the potential and there is not much scope for further increase. Now, another reason for this might be rising political tensions. One event which has kept whole world on its toes for more than a year is US-China relations. Since quite some time, the stage was set for improvement. Things are getting improved, and it seems that things might be better. There might be soon deal. Okay, might be some deal, but that did not happen as Chinese officials kept their visits short and did not visit the agricultural areas of Montana. However, both countries had a constructive talks that was being said by both of these countries, and high-level talks will be scheduled as held according to the schedule. China requires the deal as it is facing economic slowdown, and MNCs are leaving the country of dragon, while Trump needs a deal because of elections, and that may help him in keeping his position in the White House. Also, that will help the economic of the US. Tensions in Middle East areas may also increase as US has decided to send more troops there to be noted for defense purposes. But Saudi has already attacked the city port of Yemen, Hodeidah, to basically prevent rebels from carrying out drone attack. Now, both these moves by Saudi and US come under self-defense, and that brings up the case of retaliation, which in turn can lead to a chain of events that can finally go out of control. And that is what everyone fears about. Protesters in Hong Kong turned violent on Saturday as police compelled to use tear gases on Hong Kong, and Hong Kong is such an important financial center of the world, so any instability there will not go positive with the market. Also at the fact that Hong Kong Stock Exchange may go into takeover battle with London Stock Exchange. After LSE rejected the bid for Hong Kong Stock Exchange, now the latter may proceed for the hostile takeover. And both of these are very important economic centers, so tussle between them can have a huge impact on the market. And talking from London Stock Exchange, if we move to British politics, it is also getting quite dramatic. British Prime Minister Boris Johnson suspended the Parliament, and now UK Supreme Court is expected to give the ruling whether suspension was lawful or not. According to the Foreign Secretary of Dominic Raab, the government will abide by the ruling. The Guardian has reported that legal experts are feeling Supreme Court will rule against Boris Johnson. On Brexit front, however, EU President Jean-Claude Juncker, the outgoing EU President, has said that his talks with Boris Johnson were constructive and partly positive, and he feels that there is still time for the deal. In the Indian market, there was a huge reform as corporate taxes were reduced, and they are now set to be equal to the rates of Singapore. Although the reduction in tax will lead to loss in revenue by the government of rupees 1.45 lakh crore. Besides this, government has also reduced tax or cesses on hotels, automobiles, purchases, and due to this we have also seen a huge rise in hotel stocks today in the day. While all this might impact the fiscal deficit of India, but there is also another aspect that can help in a positive way. Fallen taxes will bring more people in the organized sector, and that increases the base of tax collection, which means more people will be there to pay the taxes. Now, people are actually risk averse, and evading tax is a risk. So right now they are compensated by high amount of savings because tax rates are quite high. But if tax rates will fall, then reward of evading the tax will also fall, and that will entice more people to be risk averse and pay taxes. As more people will pay tax, so there will be more tax collection in the long run, and that will be good for the tax collection and revenue of the government. At the same time, reduction in corporate tax may incentivize domestic and foreign companies to increase their capital expenditure and invest more in India. This will again lead to higher business activities, more jobs, more consumer spending, and here economics says law will come into play, which says supply will create its own demand. As companies will invest more and more, people will be hired, and the salary of existing employees will also rise. So after that increase in salary of employees will spend more, and when they will spend more, the indirect tax collection will increase. At the same time, when salary of the people will increase, so that will lead to higher collection of income tax. Beside this, there will also be more consumer spending, and if higher consumer spending will lead to more products being sold, which in turn will lead to more business activities, business expansion, more business profit, and that will increase the corporate tax collection even at the lower rate. So higher tax collection due to expansionary cycle in the economy and inflow of more people towards the organized sector was the major reason why market is in jubilant mood over the given. And beside this, it's good for economy, and also it will help tax collection in the long run. So that is why Sensex gained more than 1900 points on Friday, and Rupee also closed the week below 1700. However, government also needs to focus on other problems like high real interest rates, which is preventing the investments, and that can be considered as a major factor by defaults from NBFCs or businesses in general. And also there are reforms are required in labor sector as well as land acquisition. It seems the government has become now from reactive to more proactive, which seems to be the case that we can expect changes in the labor sector very soon, and also in the land acquisition rules can be made quite easy. So we can expect markets to remain quite volatile this week. They may rise, but any activity on economic front and political front may create very tension. It seems like right now investors are becoming both political and economic analysts. So as tensions might rise and GDP and growth data or PMI data might come not that positive, so this will make up and down quite in the market. However, today Indian markets are having their kind of a dream run. Now let's move on to the gold. Gold prices may rise this week as political tensions may rise, and that is bullish for the gold. But not to forget that increase in tensions may also bring people towards the US Treasury. So that will act as a bearish for the gold, and that will also lead to increase in value of dollar, which might again be bearish for the gold. So volatility is also expected in the gold prices. Brent went above 65 per barrel today, and WTI was also trading above 59 in the early trade in the morning, but they eased up a bit. Supply concerns, spare capacity concern, and heating political environment in Middle East pose a bullish trend for oil, but that needs to be seen that how much of it has already been factored in the prices. So if political tensions started heating up quite fast, then prices may rise. But if Saudi Arabia reported that its production has come back to normal before the expectations, then economic data at the same time showed that economy is not that good and worse than expected, numbers come out, then prices may fall as bad economic numbers will indicate the fall in demand. Bureau Report, Market Times TV.
आपको अगर हमारा वीडियो पसंद आया है तो इसे लाइक करें, साथ ही YouTube चैनल को सब्सक्राइब कीजिए और मोर अपडेट्स जानने के लिए बेल आइकन को दबाना ना भूलें।